VICI Properties stock, ticker symbol VICI. This stock is down almost 13% on the year-to-date chart, underperforming the S&P 500 big time. On the 1st of May, VICI presented earnings with a miss on FFO, but a beat on revenue. Most people like VICI stock because of the dividends, and I understand why, with dividend yield at 5.92% and some great growth stats. In here we see the total returns in the past 5 years including dividends. VICI stock returned 63%, while the S&P 500 is at 104%, and this is including dividends. A significant difference if you ask me. And with the stock coming down lately and earnings just released, it is the perfect time to do a fundamental analysis. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does VICI do? VICI owns and acquires gaming, hospitality and entertainment destinations, subject to long-term triple net leases. VICI's portfolio includes Caesars Palace Las Vegas, MGM Grand and the Venetian Resort, three of the most iconic entertainment facilities on the Las Vegas Strip. When diving into the results, we see that total revenue was reported at 951 million, up 8.4% year over year. Net income increased 13.7% year over year to 590 million. To me, this looks really good. It means that margins are increasing here. AFFO, one of the most important numbers, was reported at 583 million, up 10% year over year. On a per share basis, it is up 6.1% year over year. So we are starting off strong here. And VICI has a niche focus when it comes to tenants. On one hand, this could be a risk. On the other hand, they are really the key market player in this area. Caesars is by far the biggest tenant together with MGM Resorts, responsible for roughly 75% of the total annualized cash rent. Usually this is something that I don't really like, but take a look at the weighted average lease term or WALT. It is sitting at 41.5 year average, and this is really insane. I think VICI is one of the few REITs capable of doing this, so this comforts me a lot. And this is also reflected in this sheet. VICI has a niche focus with a high barrier to enter the market, so it is not really likely to see a lot of competition. The average lease terms is at 42 years as shown a minute ago, while other REITs are sitting at 8 to 14 years. The same store rent growth is at 1.7% for VICI, while other REITs are sitting at an average of 0.4%. All these things enables VICI to get a really solid shareholder return with dividends. The dividend compound annual growth rate is at almost 8%, which is really good, especially compared to some other popular REITs. And VICI Properties is really diversifying a lot in the past couple of years. Not only with golf courses, but also with adding more geo-diversification. But let's not forget the Las Vegas Strip, where they own 10 trophy assets according to their investor presentation. Looking at the summary of the balance sheet, I also get really excited with a great leverage ratio. And also the credit ratings are looking pretty good to me. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. VICI is a 29 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at nearly 11.37, indicating they might be undervalued. Later in this video I will show you my 3 price targets for VICI stock, so make sure to watch until the end. Because price to FFO is only telling a small part of the full story here. Revenue is at 3.7 billion, and in this graph we see that revenue went up in the long run. To me this looks really good, especially for a REIT. The only thing is that growth is slowing down a little bit here. We see that margins are going up and down in a longer period of time, but the number itself is looking really good. But I would like to see a bit more steady in pattern from here. EPS is going up in the long run. It is not always steady and consistent, but that's very common for REITs. And as is expected in 2024 and 2025, the EPS will grow at 6 to 8%, which is a great number. In 2026, they expect the EPS to decrease again. For the revenue, it is looking pretty interesting, with decent growth numbers in 2024. And from there, they expect that the following 2 years will show lower growth numbers. In 2027, they expect again pretty big growth numbers. Return on assets is sitting at 6%, which is a low but decent number for a REIT. Return on equity is looking really good at 10%. And the most important number, return on invested capital, is sitting at almost 5%, which is again a decent number. And it is also slightly higher versus the 5-year average, so that's also very nice. Current ratio is at 30, which is way too high in my opinion. This is definitely something to keep your eye on, because you want this number in the range of 1 to 3. And right now VICI has 17.6 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. VICI has almost 500 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like, especially in combination with the current ratio. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at almost 5.8%, which is a great number. Annual payout is at $1.66 and payout ratio is at 66%, which is below the 75% average for REITs. The 5-year growth rate is sitting at almost 8%, which is a great number, and they have been increasing the dividends for 5 years in a row now. And that's pretty impressive given the fact that they started paying dividends in 2018, when the company was founded. We see that growth is pretty steady and consistent here. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to go down from here. And overall these dividends look really interesting to me, but how about the historical returns? I decided to compare VICI stock with the overall market, in this case the S&P 500. On the 5-year chart we see that VICI returned 68%, which is significantly lower versus the S&P 500, which returned 108%. And keep in mind this is including dividends. On the 1-year chart it looks not good for VICI, with a minus 3% return, while the S&P 500 is sitting at 28% return. On the 6-month chart it is the same story, with VICI returning minus 5%, while the S&P 500 is sitting at almost 16% return. On the 1-month chart it is again VICI that is having a negative return, but they are close to break even. The S&P 500 however returned 5%. So bottom line, VICI underperformed the S&P 500 in both the long run and the short run. But could this be the perfect time to buy VICI stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 6, 8 and 10%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 68, 70 and 72. And for the free cash flow margin I'm putting in 58, 60 and 62%. For the PE ratio I'm putting in 10 and for the price of free cash flow I'm putting in 12, 14 and 16. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now VICI stock is around $28 to $29. I hit analyze and we see a lot of red numbers. And since this is a REIT, I'm only focusing on the discounted free cash flow. We have a low price target of $27, we have a mid price target of $35 and we have a high price target of almost $46. To me, the mid price target is the most justified here, indicating that this stock is undervalued right now. Which price target do you think is the most justified here? Let me know in the comments down below. My final conclusion on VICI is that it is a great company with a niche focus. It will be hard for other companies to penetrate into this market in my opinion. VICI also has an insane profit margin, which is very nice and most fundamentals look pretty solid for a REIT. There are 2 things that I don't really like as of right now. One of them is the debt in combination with current ratio, and the other being the fact that they don't have a really long track record. With the second one, I can live, but with debt and current ratio I'm having some issues. For now I'm keeping a close eye on these numbers to see if they get in a healthier range. From a dividend point of view things look really good with both a high dividend yield and also some great growth stats. From a value point of view I also get really excited since to me this company is still looking undervalued. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.